So have you ever wondered what is a reverse mortgage and how can you calculate the amount you can borrow, as well as why in the world would anyone ever do one of these crazy things? My name is Matt Helton, reverse mortgage specialist. Look forward to sharing that with you today. So, what is a reverse mortgage? So, as you probably know, all about regular mortgages, you may call them, but the real phrase is forward mortgages. So, what is a forward mortgages? The things you know all about. That's a mortgage where you make the payments every single month and the balance goes down. But but you're obligated. You have to make those payments on a regular mortgage, right? The loans you probably have now, no pay, no stay. You have to pay the payment every single month. So, what is a reverse mortgage? A reverse mortgage is a loan where the balance can increase. Now, that doesn't sound positive, right? But here's the positive point. You can make payments to cause your balance to go down, but it has the ability to go up because the advantage to you as a senior, or maybe your family member that's a senior, is you don't have to make the payment every month. Now, wouldn't that be nice? So, if you think about this, what is a reverse mortgage? If you boil it down, it's a mortgage where the balance can go up. Does not sound good. I'll admit that does not sound good, but here's the positive. Here's why it is good. If your mortgage payment is $1,000 a month on your current mortgage, you don't make the payment 3 months in a row on your current mortgage, what happens? What would happen if you didn't make your payment for the next 3 months? Unfortunately, your current lender would stick a sign in your yard, right? Not good. So what about a reverse mortgage? What if you didn't make the next three payments on a reverse mortgage? What happens? Nothing. That's what it's for. It actually gives you the option to not make payments. Isn't that a novel concept? You have the ability to decide, do you want to send $1,000? Do you want to send in 500? Do you want to just send in the interest? Or do you want to send in zero? So that's the unique part about this. So what is a reverse mortgage? It is a loan that allows seniors 62 and older. It allows them to have the freedom to make payments if they want to make payments if they have extra money, to pay the interest, or it allows them to pay zero. So why in the world would you want to do that? Think about this. What percentage of your income do you spend either paying the mortgage, paying the taxes, paying the insurance, paying the HOA? The average senior in America spends about $1,400 a month on housing expenses when you add up all those things. So let me ask you this. What if you didn't have to spend that $1,400 a month? What could you do with your housing expense if you didn't have to pay it every month? Even if it's not 1,400, let's say your housing expense is 900, but you're probably only making the average American Social Security is 1,976 by most accounts. So if your mortgage payment's 900 bucks, that's about half of your income is going to the mortgage. So what would life be like if you didn't have to send that in every month? Or on the other side, what is a reverse mortgage if your home's paid off? So reverse mortgage is the ability for you to borrow from your home's equity, borrow from the equity, use some of the money to pay off other bills, to save money, to be able to prepare for the future. I like to call this your second chance. Now, what do you mean by that? Second chance? Well, if you didn't get around to long-term care insurance, I just saw a stat 7% of Americans, only 7% bought long-term care insurance. You want to hear the other side of that coin? 70% are going to need long-term care. See the problem? So you can use the home equity to pay for long-term care if that ever comes up. Also, too, I know a large percentage of people don't ever get around to buying life insurance. Well, you can pull some of this money out to have it handy if something ever happens to you. Another thing, it's a second chance at savings. Now, what do I mean by that? You may not have got around to maxing out your 401k, maxing out your IRA, but you know what? You made those payments every month, didn't you? You built up a lot of equity. Your home may be paid off or maybe not, but still, you built up a lot of equity. There's savings there. Unfortunately, you just can't use it. That's what this does, allows you to use that. So it's your second chance at long-term care insurance, your second chance at life insurance, and your second chance at savings for the future. The average American has over 300,000 in equity in their home currently, 300,000. So what this does allows you to use a percentage of it, small percentage, to give you peace of mind because you know you have this bucket of money tied to your house that you can use. So let me ask you this. If you had extra money that you could use with no monthly payment, what would you do with it? We have clients do all types of things. They'll either use it for number one, for paying bills. We have seniors use it to pay the taxes, to pay the insurance. We have seniors that use it to pay medical bills. We have seniors use it to help out family members. We have seniors use it to travel. We have seniors use it to thrive in retirement, and that has a different definition for everyone. It has a different definition for everyone. Sometimes to thrive in retirement for some seniors, I can finally afford to go back to eating out once a week. I can finally afford to go down to Florida on vacation. I can finally afford to actually take my grandkids out and not feel pinched and cramped for money. So it just gives you peace of mind and gives you freedom because you have the choice to you send in the payment or not. And then also you have the choice to use the money however you wish. So you may be wondering, well, how do I figure out how much I could actually borrow? So it's a little complicated, but I'll give you some round numbers to work with. These programs kick in at age 62. At age 62, in most states, is where you first qualify for the reverse mortgage. 62, all the way up to there's no maximum age. So you can borrow anywhere from about 30% of the value of the home up. If you're up in years, you may be able to borrow 45, 50%. But if you notice, that's how much you can borrow. So if it's a $400,000 home, you may be only able to borrow 100 and something thousand. Do you know what that means? There still leaves 300,000 in equity that you would be able to use in the future, meaning if you can't live there anymore, you can sell the home, cash in on the equity because you still own your house. It's a regular mortgage. Or if something happens to you, you can actually sell that home, your family can, they pay off the mortgage and they cash in on the equity. It's basically in today's world, the reverse mortgage is an FHA loan, which is the FHA reverse mortgage option. It's called a home equity conversion mortgage. It's an FHA loan that allows flexible payments. You still own your house and you can pass it on to your family. Sounds like a pretty cool option for a lot of seniors. If it's for you, great. If not, I really enjoyed you watching this video. I really enjoyed and hope you enjoyed learning more about this. And if it's not for you, please share this with someone it is. All we ask is that you subscribe because we have some fantastic speakers on here talking about how to serve seniors. And also, please share this video with other people because we know there's seniors out there that could have better retirements. They just don't know it because they've heard myths and misconceptions about reverse mortgages. They may have applied in the past, but they don't apply now. These are the consumer protected version. Our number one goal is to take care of seniors and make sure they have an awesome, awesome retirement. So thank you so much for watching this video. This means the world to me. And please share this with other people. My number's on the screen. If my team and I could help you, please let us know. Thanks again. Have a great, great day.